Santos, let's go straight to our top story. A market research firm expects the Philippines' tourism industry to be among the last to recover in Asia, citing data from ANZ Research. The Philippine Star reports that the Philippines is likely to be among the laggards in Asia's tourism revival, together with India, Malaysia, and Indonesia. ANZ explained that these nations remain weak in terms of reopening for tourists due to slow vaccination efforts and uncontrolled local outbreaks. Meanwhile, Tourism Chief Berna Romulo Puya tells One News's Agenda that they're eyeing to open up the country to foreign tourists when the time is right. Puya said the tourism industry must be prepared to welcome international tourists as early as now. In line with this, Puyat said the agency has met with the International Air Transport Association for the creation of a travel pass that will compile all documents into one mobile app to ease facilitation of travel. Again, the local bourse on a trading break today in observance of the Day of Valor. Again, the index yesterday snapped out of its three-day rally, sinking 1 6/10%. But elsewhere in Asia, trading has been on the downside following a rally in Wall Street. That's after Fed Chairman Jerome Powell assured that the central bank can reinvigorate the economy without having to stoke painful inflation. That rally, though, not spilling to Asian gauges here, with Japanese shares the lone bright spot in the region here. As you can see, the Nikkei at least ended the day up by 2/10%. The topics likewise gaining close to 0.4%. It's a different story though for Korea and Australia here. The Kospi, as you can see here, ending the day in the negative territory, down in 0.4%. Aussie stocks likewise here, as you can see, also ending the day a bit flattish here, but still on the downside, close to 0.1%. But nowhere is the fallout more evident than in Chinese shares here. As you can see, you have Shanghai down 0.9%. Shenzhen likewise also inching lower, close to 8%. It's after factory inflation dropped to its fastest since 2018 to 4.4%, going way above estimates of 3.6%. Hang Seng likewise also, as you can see in the red, still down in 1.1%. Here are other headlines we're keeping our eyes on. Trade Secretary Mon Lopez says the number of loan applications they received for small businesses has improved, but is still lower than expected. DTI said small businesses applying for loans from the government remain low at about 8,000 per week. This, however, is an improvement from the initial average of 200 applications weekly. Lopez noted that business confidence remains weak and may have dampened small firms' interest in taking on loans. So far, DTI Small Business Corporation has approved loans worth up to 2.7 billion pesos to more than 23,000 borrowers. That's out of the 10 billion pesos allocated under the Bayanihan 2 law to assist small businesses affected by the pandemic. And the central bank retains its ceiling rates for credit card charges as consumers continue to struggle with the pandemic. BSP Governor Ben Jokno said the decision is also based on the state of credit card financing, as well as the safety and soundness of banks and other credit card issuers. The annual interest rate cap is at 24%, which translates to an applicable monthly rate of up to 2% on unpaid outstanding credit card balances. Credit card issuers also cannot impose other charges on credit card cash advances except for a maximum processing fee of 200 pesos per transaction. The BSP also set the limit for monthly add-on rates for credit card installment loans at 1%. No climbing out of the hole yet for the auto industry. Sales slumped 12% in February year on year, though still posting monthly gains. What might this mean for the financial sector? To talk about that, we have BPI Retail Loans Group Head Dennis Fronda. Good afternoon, Dennis.
Hi, Jester. Good afternoon, and nice to see you're doing well today. And I hope that you're keeping yourself safe and healthy.
Same with you, Dennis. So your assessment first of auto sales so far this year, and how has that impacted the financial sector?
Yeah, Jester, as you mentioned, as of February, yeah, numbers are still down versus 2020. We don't have the numbers for March yet, so and that of course considers the 2 week ECQ for NCR Plus. But for us in BPI, our numbers are actually at the same level as the first quarter of 2020 already. So it's been good until the point when ECQ was announced 2 weeks back.
Hmm. When you say that it's been good prior to the reimposition of ECQ in the NCR Plus area, how much of a setback was that? Can you give us figures?
Actually, Jester, it's too early to say it, especially that the ECQ was only in NCR Plus. So we're hoping that the effect for the entire nation isn't that as big as what happened last year. So we're also hoping that the ECQ won't be extended further, so that people who are really bent on buying would still pursue their plans of buying when ECQ is lifted.
One other thing I'm interested about is, did you see a bump up in auto loan defaults given the economic downturn, and by how much?
Yes, definitely, Jester. Actually, by as much as three times the normal levels. But the good thing, Jester, is since September or after the peak of the delinquencies, the non-performing loans have actually been stabilizing up to the point, of course, as I mentioned before they announced ECQ. So the number of non-performing loans for us in BPI have been stabilizing. It's been going down since September of 2020.
But it hasn't gone down yet to levels seen at least pre-pandemic.
Not yet, Jester. We're hoping that towards the end of the year we'll be close, but our projections shows that we'll not yet be at the level of 2019.
But when do you expect at least non-performing loans to at least reach such levels?
Um, Jester, provided that sales would pick up, because as you know that non-performing loans is computed as a ratio of
Mhm.
defaults versus portfolio. And if portfolio continues to climb, then the ratio would go down. So we're hoping to see it hopefully early next year. Uh, and of course, as I mentioned again, the ECQ is something that we're carefully watching also.
Really wait and see mode, really, as to what's going to happen next. But given that you did see a bump up in auto loan defaults, does it follow that there's also a marked increase in car repossessions?
Jester, that could not be avoided. Of course, there are quite a number of people have actually been starting to render the units,
Mhm.
and we have seen actually not only in BPI but in banking industry, repossession of units growing up month on month, and yards are actually becoming a full as of today.
In your case, particularly in BPI, by how much?
For us, Jester, we've been able to manage our repossession rate quite well. In fact, our yards are not yet full. We still have a room. Of course, we don't want that to happen, but our yards are quite managed well, and we're able to keep it at that level. That's nationwide, not just in Metro Manila, but all across the country.
Okay, now car industry, of course, you have they're expecting, at least at best case scenario, projecting a sales growth of 30 to 35% for 2021. Do you still see that being achievable, especially after the reimposition of ECQ?
Jester, not only because of the ECQ, I'm sure you heard of the safeguard duties.
Mhm.
After that news, actually, the industry themselves had to reduce their forecast to around 20 to 25%. For us in BPI, our economists actually project the same level, around 20 to 25% increase for 2021.
And given that as well, like what you just mentioned, the government slapping a temporary levy of as much as 110,000, if I'm not mistaken, on imported vehicles, at least for 6 months. 6 months. How is this affecting you directly?
Yeah, you're correct, Jester. That's 70,000 or 110,000, depending on the unit. Of
Mhm.
course, because of that imposition, actually at the start of the year there was much confusion in the industry. Some manufacturers opted to pass on the increased excise tax to the buyers, while some opted to absorb the cost themselves. So early on, we didn't actually know the direction which of the brands will go. For us in the banking industry, of course, we will continue to support the sales, but we base it on the maximum finance value or the standard retail price of the units. So if a manufacturer decides to input the cost of the safeguard duty, then that becomes their standard retail price, and that's where the amount finance of the banks would be based.
Question now is all these developments, including the ECQ at the same time, this new set of levies here, how is this affecting your targets and what figures are you looking at for the year?
Jester, we're still hopeful actually that um, our numbers are still the same. We're sticking to our targets for the year, which is 10 to 20% better than 2020. We're hoping, number one, that the ECQ won't be extended further, and number two, that the Tariff Commission would come out immediately on their decision whether this safeguard duty will be a final one or whether they'll take it back.
Okay, now, question, when do you see the local auto industry stabilizing?
ECQ aside, Jester, we're hoping that the second quarter would be better for the industry. First of all, you've been seeing a lot of brand new model launches, a lot of pickups right now in the market, and there will be more. Jester, there will be a lot more units coming out throughout the year. All of this intended to perk up the market.
And then, of course, we've been talking about defaults and repossession. You have at least a new project here to protect clients and to avoid defaults. Exactly. So you have a new offering. It's called the multi-year project. How does it help exactly, and how does it differ from the conventional packages?
Yep, correct, Jester. We actually launched our BPI Auto Loan Multi-Year Protect. It's a first of its kind auto loan solution in the market. It's designed to give our car buyers and borrowers premium and all-in-one service by actually covering your financing needs and car security from start to finish. So it's actually an innovation where our borrowers need not put up upfront cash for insurance. They don't need to budget annual insurance payments, which we normally do, but instead it's already embedded from first month of their payment all the way to the end of the term of their loan.
Okay, at least something there for clients to think about, given, of course, the situation that we are in. Thank you very much for your time this afternoon. Dennis Fronda, head of the BPI Retail Loans Group.
Thank you, Jester. Always a pleasure. Stay safe.
And those are the biggest business stories today, April 9, 2021. Catch Business World live again Monday next week at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.